JJ the CPA here. Hope you're doing well. So weekend update here. Oh my gosh, there's a lot of stuff going on. Here's the deal. The SBA, U.S. Treasury, really changing their tune. I'll probably have some specialty videos on this, but they are indicating, they being the SBA, came out here in the last 24 hours and made a final interim rule, and that is to get your money back to the SBA on or before May 14th. So who are they talking to? Well, for sure the publicly traded companies, because they actually had to have their money back by last Thursday. The ones that are not publicly traded, they're saying get that money back by the 14th. And what's interesting, and I'm going to talk about it here in a little bit, they're literally doing some major Monday morning quarterbacking on this, and they're putting together, in essence, brand new regulations or brand new qualifications that they're now wanting and expecting you to look back at and determine if you should have taken that money. And if the answer is no, then you need to return it. And if not, you're going to be facing potentially some criminal investigations on that. So what's interesting here, there's 17,000 Catholic churches, 12 to 13,000 of them took the PPP funds. Interesting, but it's been making headlines. I don't have an opinion of it. 70% of the U.S. Olympic teams applied for and received PPP money. And then there were a number of private schools. And these type things, or entities, I guess you would say, are going to be under fire and basically are being expected to return monies, because what they're looking at here is on the PPP is what financial burden did the business or entity or organization actually face or suffer, or was there really an absolute urgency for them to get the money or not? So for a school, was enrollment down for the next year? Had people not already paid? These are not my opinions at all. This is what's being reported there. So I do feel like it's pretty unfair, not only to churches, U.S. Olympic organizations, even the private schools. Unfair in that at the time that they applied, they met the qualifications and applied. But this rule, or question 31, we're going to come back to. But small banks, remember, got special allocations, as well as the credit unions, $30 billion each. And they are the ones that are being kind of the unsung heroes here, in the sense of still having funding to give out. So if you haven't received PPP funds, boy, I feel like a broken record. You need to get with a small bank or a credit union. And if you don't have your money by now, you really do need to move probably to another lending institution, because somehow there's something going on. Because really, when you start looking around, everybody, they're getting their PPP. So if you don't have it, you probably need to go somewhere else. The main thing that we're seeing everywhere is that if you got your PPP, you're going to keep your PPP, then you really need to shore up your documentation, okay? Document. All right? So the main question that I'm still waiting on, though, related to the documentation, is further interpretation from the SBA on 1106 D5. And what is that? That is, in essence, this rule that is in the CARES Act, in the forgiveness section. That's what 1106 is of the CARES Act. And D5 is indicating that, well, if you hire everybody by June 30 and you reduce any reduction in salaries, then it's an ollie oxen free. And I've got many videos on it, but I'm really wanting more clarification from the SBA on that, because we all know it can't just be as simple that for one day you can show that everybody came back and everybody got their salaries. So I think that the next thing after this May 14th is going to be a real kind of ratcheting down of what the forgiveness parameters will be. And I think there'll be a lot related to that 1106 D5. And then the thing to note real quick, that if you're relying on 1106 D5, okay, that is in essence saying what I just said, you hire and reduce, you're getting forgiveness. But the thing to remember is that that's assuming that you spent the money and you spent it correctly. So returning the PPP, if you're going to do that or you're considering it, then what you can look at is whether or not it would make sense to get the employee retention credit, because that is an either or. The IRS came out here recently, really made that clear. The employee retention credit, you should know, is 50% of whatever you pay that employee, up to $10,000 of their comp, or a $5,000 tax credit per employee, and that starts March 13th and after. We also know we have the sick leave, where you get to write off 100% of what you're paying that employee. There's a $511 per day maximum. If they have COVID or under quarantine, it's $200 max per day. This is per employee, and you get it 10 days worth. We also know we have the expanded Medical Leave Act, and for both of these credits, it's a reduction in your federal deposits that you're making on payroll. Okay, so if you're looking at, well, I'm going to return PPP, you can be looking at, well, what credits would I get, right? Because there are credits here that in essence cover 10 days for certain qualifications, or 50% under other qualifications. But then if you don't take the PPP, okay, then do you just send your employees on PUA, or for the time that they were on PUA, well, they just continue on PUA. So you would want to balance that at this point. And in essence, what the SBA is saying on what just came out in the last 24 hours, you return it on or before May 14th, and it's kind of a, hey, you know, it's all good, we're done. We believe you that at the time you felt you qualified, but now you see that you didn't. So a little unfair on that. I'm not criticizing, I'm just saying it's a little unfair, right? That's just a fact. Self-employed, remember on this, this has been a big question that I've gotten over and over, but it's an automatic forgiveness. You take Schedule C from 2019, line 31, divided by 52, times 8 weeks on that. And then remember on the PPP forgiveness now on the employer side, okay? So if you do it properly, okay, then what you're looking at here is that you want at least 75% of it to go to payroll, no more than 25% of it to go to the other expenses, other being the rent, the utilities, the interest, right? But the thing to note is that there seems to be a false impression that if you don't meet those thresholds, that none of it will be forgiven. So to the extent of what you spend the money on, it properly is with a qualified expense, you will be forgiven for that dollar amount. But if you don't meet the threshold, it doesn't somehow mean that none of it's going to be forgiven. So two differences there between the self-employed. So what is this SBA frequently asked question? It's number 31. If you go to my website, jjthecpahelp.com, it's a community service website that I put together. There's no booby traps. You don't have to give me your email. You just click and you'll see. But on the PPP page and on the PPP forgiveness page, I have the latest SBA FAQs. You can go and take a look at question 31, but it now requires the business to evaluate if they could use the funds and not be detrimental to use their own funds, okay, or to borrow money as long as it wasn't going to be detrimental to the business. Like, that's pretty subjective, right? So it's pretty subjective. You know, do you feel that you needed it up front? Subjective. Do you feel that back when you took the money, could you have used your other funds? Could you have used other means of loans? And if the answer is yes, then there's indicating that maybe you need to pay this back. Okay, that's what FAQ 31's talking about here. And so you have till May 14th to look at that. And so here's the parameters that they're looking at. They want you to look at is, what was your cash position at the application date? Okay, what were your known obligations at that time, whether new or current? And then what funds did you have available? And then could you have gotten a loan somewhere else that it would have not been detrimental to your business. And then in essence, could you go get some financing from somewhere else? And basically what FAQ, frequently asked question, is saying on the SBA is simply, hey, listen, if you're okay, then you need to give the money back. Okay. I really am trying to stay neutral on this. The unfair part for me is just people took the money, they've been using it, right? They're using it for payroll, they're using it for rent and utilities, right? I mean, we're into PPP2. I mean, the initial applications were done April 3rd. There was people getting money as probably soon as, April 10th, something to that effect. And now we are basically a full month after that. And now there's the look back. And I'm not even saying that it's, it would, if that was the qualification up front, then it would be fair that, yeah, okay, so if a business has savings, if a business has a line of credit, if a business can go get other financing, and before they went and got the loan, that was evaluated, and part of the requirements would have been, well, if you have this, then you don't qualify for PPP, even though that'd still be somewhat subjective. But to now go all the way back, that could put businesses into kind of a pickle, the ones that they use the money. Because in essence, what the government's saying is, hey, you got a few days to basically get the money back to us. So if you've already been using the money, then you now need to use funds that you could have used otherwise. I get it. I mean, I get it. And what happened there, okay, is that more than a few bad apples ruined this for everybody because the money went as fast as it did. Now, I think that if they would have not done a $10 million limit, because everybody's talking about what was the intent of Congress. Well, clearly the intent of Congress, in my opinion, was any business could get it. Any business, okay? When you're up to $10 million in payroll, right? I mean, think about this, $10 million, right? If you're working that back up to a $10 million loan, okay? That's millions and millions of dollars, like $4 million a month of payroll. Like, what company has $4 million a month in payroll? A big company, right? So now they're coming back like, well, these big companies shouldn't have got it. Okay, that's fine. Publicly traded shouldn't have had it. Okay. LA Lakers, churches, the schools, the US Olympics shouldn't have had it. Okay, but the intent of Congress was, if you're going $10 million, right? I mean, it would have made sense if it was like, well, every business that needs it can come. It's a, 500,000 max or, $1 million max. That would have been a lot different. But in essence, that money went quick. They came out with more. And then I think a few people really got irritated, got a little upset. I know that I was saying some things early in, which was, if you don't need it, don't get it. I had a number of conversations with clients that ended up not getting it because they really didn't feel like they could make the certification that was on the application, which was that they're facing uncertainty that they wouldn't be able to pay their employees. And what's interesting is it's almost like the employers that said, you know what, hey, you're done. You're not going to be on payroll. Go get yourself some unemployment, are like the big winners here in the sense of they didn't get the PPP. They just said, hey, go get your unemployment. They didn't take the PPP because they wouldn't have had any wages. And what would have been good, and I've talked about it, for a while now, is the government should have just said that. Hey, if you're shut down, send your employees to get PUA. First of all, there wouldn't have been all this money given out minute one, right? You're not fronting 8 weeks of payroll. You're just paying it 1 week at a time until the business opens back up. But see how tough this is related to Monday morning quarterbacking? So it's just not fair to anybody. I think that the SBA is in the U.S. Treasury is like, guys, this was not fair. You took the money and you took the the money? Like, what are you doing, right? I think they were hoping for a little more good faith on it. But now they're going, hey, well, then you know what? Everyone, this is what you're going to do. So, hey, here's some interesting, I'm going to read this because it's kind of interesting, but for PPP2, there is 187 billion that's been loaned out. So there was 310 billion that was renewed. There's been 2.5 million in loans. Okay, that's the number of loans. 2.5 million in loans, 187 billion in essence loaned out. And then check this out. So this is really interesting. So 1.2 million loans were with lenders that were over 50 billion in assets. Now, this next statistic is interesting, and then the third statistic is very interesting here. Now, 359,000 loans by lenders that were between 10 and 50 billion in assets, but check this out. Almost 1 million loans by lenders with under 10 billion in assets, right? So when you look at the above 50 billion and then below 10 billion, okay, the majority of the loans have been either with the big houses or the little ones. So this is good news. Okay, there still seems to be a lot of PPP money out there. Here's the other interesting part. The average for PPP2 is $73,512 average PPP loan. So, but you know, here's the thing. I mean, if you look around, the headlines right now are, you know, businesses need to consider insolvency or criminal investigation. Now, is that going too far? Well, thing is that if they're they being the U.S. government, U.S. Treasury, the SBA, if they feel as though when it comes to forgiveness, right, you're bringing in documents, and they're going to be like, well, why did you get this money? I mean, look at what's on your balance sheet. Look at how much money you had here, and then you went and got a PPP loan. So that's what I told you earlier, what I'm concerned in 1106 on the D5. What are we going to have to look at there? But then in 1106E, what's all that? That's the forgiveness part of the CARES Act. But we know that there's a number of lawsuits that are coming out here too. What's interesting is they're suing the SBA. There's a couple of interest groups that are suing the SBA. There is a specific couple of different companies that, without getting the details, just because it's kind of unsavory type businesses, but they're suing the SBA, saying that they've been discriminated against because they're the type of business that the SBA is infringing on their rights by not loaning to them. Also, there's a state, there's a group of state attorney generals, so a group of state attorney generals that are getting together and calling for changes as it relates to how PPP was given out. So, you know, it's, gosh, you know, a term comes to my mind that's a little vulgar, you know, in terms of strong language that I won't say, but what a crap show. Man, so this is where we're at. I mean, I kind of feel like going into next week, if you haven't gotten the PPP, get with a loan or get with a bank that's going to do it. And then I'll just say this, if you got money based on 1099, you need to give it back by May 14th. Meaning you paid out 1099. So if you paid out 1099s and then that resulted in you getting PPP money, there's no two ways about it. You need to get that money back to the SBA, which I'm assuming is via the bank. The other part is if you received a dollar amount as an S-Corp owner, okay, well, unless you have wages, that didn't qualify. There's probably an amount that you got potentially if you were including funds on your Schedule C as well as Schedule 1. All I'm saying is this, right? Now it's going to start swirling, okay? Let me bring it down. You got PPP as an employer based on wages, health insurance paid, and employee retirement match and SUTA. If you got, and you should know, if you got PPP money that included something else, okay, you need to return that portion of it. If you are a sole proprietor, okay, This means that you don't have employees. Let's just do it that way. You don't have employees. It's only going to be Schedule C, line 31, okay, that gets to be used to consider what the loan is. If something else was added to that, and then you got a loan that was in essence higher than what you should have received, you need to get it back to the SBA, and I'm assuming it's the bank. Now we have a great time friend and someone who's tuned in every day, and they indicated that they have tried to return some money to the bank because they inadvertently got approved by 2 banks, and the one bank saying, you know, well, we can't take it back. So I haven't seen anything on what the SBA is going to do about this, but in this upcoming week, okay, I'm going to be shooting some other videos on this, but you're going to have to be making some strong considerations on whether or not you should return the money. And that's just such a tough, terrible spot to be in. So, all right, hey, thanks for tuning in. If you made it to here, you probably are a subscriber, but if not, I'd love it if you subscribe. And then don't you ever forget, you've never met a CPA quite like me.